WP Carey stock, ticker symbol WPC. This stock is down 17% year to date. On the 28th of July, WPC presented quarterly results where they beat on FFO and revenue. Analysts think they will beat on their next earnings as well. Most people love WPC stock because of the dividend, and I understand why with dividend yield at 6.5% and 12 years of dividend growth. So could this be the perfect moment to buy WP Carey stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does WP Carey do? WP Carey Incorporation is a real estate investment trust principally involved in the ownership of properties located in the US, Western Europe and Northern Europe. Their portfolio is primarily focused on single-tenant office, industrial, warehouse and retail facilities. When we check the quarterly financial results, we see that revenue was reported at 452 million, up 31% year over year. Net income is up 13.2% and is looking pretty good. But it has to be said that I prefer net income growth and revenue growth to be a bit more aligning. AFFO is up 3.8% year over year, which is also a good thing. But again, I would prefer higher numbers here. WP Carey also reported the full year guidance AFFO to be between $5.32 and $5.38 per share. WP Carey has a large portfolio of 1,475 properties and 398 tenants. North America represents 65% of the ABR. Europe is second with 34% of the ABR. The weighted average lease term or WALT is at 11.2 years, which is not too bad in my opinion. The top 10 tenants represents 19% of the ABR, which is also looking pretty decent. And an interesting thing is that WPC is focusing on self-storage units as well, with 85 properties and an average occupancy of 91.9%, which is not too high to be honest. In here we see the full breakdown of the industry diversification. Industrial is by far the biggest segment with 29% of the ABR. Warehouse is the second biggest segment with 24%. Office is at 16% and that is something that I like to see going down. WPC used to focus on office, but the business is changing, which is a good thing in my opinion. WPC also focuses on retail stores with 20% of the tenant industry. And in here we see the top 10 tenants breakdown. The biggest tenant represents only 2.6% of the ABR, so this looks pretty good to me. In here we see the same store ABR growth. To me this looks pretty good again. It is growing quite steady, especially after 2022. The lease expirations also look pretty good to me, with roughly 50% expiring after 2033. The occupancy rate also looks quite impressive with 99%. Earlier we saw that self-storage units were a bit lower, so that's something to keep your eye on. Another important number is the net debt to EBITDA. Right now it is sitting at 5.7, which is a great number. I prefer this number to be in the range of 5.5 to 6.5 for this company. The last thing that I want to show before diving into the fundamentals are the dividends. It is looking pretty good to me with steady and consistent growth. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. WP Carey is a 13 billion market cap company. PE ratio is not a fair metric to use with REITs, so I will be using the price to FFO instead. Right now it is sitting at 10, indicating that they might be undervalued. Later in this video I will show you my 3 price targets for WPC stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 1.67 billion and in this graph we see that revenue went up in the long run. Ever since 2021, revenue increased quite decent. Over a longer period of time, margins are going up and down quite a bit. Right now it is increasing again, which is something that I really like. EPS is following the same pattern as the margin, so I would prefer a bit more steadier pattern here. Analysts expect 2023 to be a great year in terms of growth. In 2023 it is expected to see lower growth, but in 2025 it is picking up some pace again. For the revenue it is a pretty similar pattern with high growth in 2023 and after that things will slow down. Return on assets is sitting at 4.7%, which is a decent number for a REIT. Return on equity looks good and the most important number, return on invested capital, is sitting at 2.8%, which is a low number. But it is slightly higher than the 5-year average, so that's the good part here. Current ratio is at 0.17, which is looking pretty interesting. It is going down in the past couple of years, but I prefer a number between 2 and 4 with this company. Right now WPC has 8.6 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. WPC has 207 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 6.5%, which is a great number. Annual payout is at $4.28 and payout ratio is at 81%, which is slightly above the average for REITs. The 5-year growth rate is at almost 1%, which is a low number. But since dividend yield is already at 6.5%, I don't care that much. They increased the dividends for 12 years in a row, which is also pretty nice. And if you take a look at these numbers, the dividends paid since 2018, you see that WPC is slowing down the dividend growth quite a bit. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at lower numbers. Overall these dividends look pretty good to me, but how about the historical return? I decided to compare WPC stock with the overall market, in this case the S&P 500. Next to that I added EPRT and STAG. On the 5-year chart we see that WPC underperformed the S&P 500 big time, with only 30% return including dividends. EPRT is the only stock in this list to beat the S&P 500. On the 1-year chart it is looking pretty interesting, with the S&P 500 returning 7% versus WPC returning minus 20%. STAG has the highest return with almost 16%. On the 6-month chart it is the S&P 500 with the highest return, 11% in total. WPC is at minus 18.9%, while STAG is again the REIT with the highest return in this list. On the 1-month chart it is again the S&P 500 with the highest return, but all are at a negative number, which is very interesting. WPC is the lowest again. So bottom line, WPC underperformed the S&P 500 short term and long term, but with the stock hammered down quite a lot it could be an interesting buying opportunity. So could this be the perfect time to buy WPC stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 6%, 8% and 10% based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 43, 45 and 47. For the free cash flow margin I'm putting in 63, 65 and 67. For the PE ratio and the price to free cash flow, I'm putting in 15, 16 and 17. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now WPC stock is at $64. I hit analyze and we see a lot of green numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $62, which is right below the current stock price. We have a mid price target of $76 and we have a high price target of $94. To me, the mid price target is the most justified here, indicating that this stock is undervalued right now. My final conclusion on this stock is that I really like the business, especially the way they are developing right now with the expanding to other industries as well. Most fundamentals look really good and so does the valuation. It has to be said that dividend growth is a little bit lagging, but with dividend yield sitting at 6.5%, I don't mind that much. For now, I'm putting them on my watch list, and when the time is right, I will buy this stock. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.